The U.S. dollar continues its move to the downside ahead of a key panel discussion in Europe with Lagarde, BOE's Bailey, Federal Reserve Chairman Powell, set to speak on that panel. I don't expect a lot of fireworks. The buzzword from Sintra is uncertainty. It seems for that event and that the place that we are right now, despite the fact that President Trump it kind of feels like that the Federal Reserve should cut rates. Maybe they should, but to 1% is probably a little bit questionable at this time, given the inflation picture that could rise as a result of the tariffs cut ahead. So that's the background, but the U.S. dollar continues to get hit in the eyes of that storm. And I'll talk about the technicals that are driving these three major currency pairs: euro versus U.S. dollar, dollar versus yen, sterling versus U.S. dollar from a technical perspective. So let's get started. The euro versus U.S. dollar on the daily chart. A few days ago, the price moved above this swing area. The swing area is defined by these swing lows right here and then swing highs right here before the market started a rotation all the way to the downside. It took the price down to 0.9535. Since then, we've seen a rotation, up toward the 61.8% of that move to the upside. Lots of consolidation here. One final move to the downside before the move to the upside in 2025 into 2024, which is taking the price all the way through that 61.8% retracement and up through the high price, most recently the high price that we saw here earlier in the year, and above this swing area right here. That was the most recent break. We did basic in that area. That area comes between 1.1663 and 1.16916, and that area is the key support now on the daily chart going forward. As long as the price remains above that level, the bias remains to the upside. The next key targets come against these highs right through here. This goes all the way back to 2021. They come in right near the 1.1909. So we're sort of halfway in between this point and this point right here, with the price trading at 1.1813 currently. And will that momentum continue on the daily chart? We will see, but that's the target up there. Next key target, 1.19109 for the euro versus US dollar. Taking a look at the hourly chart, you can see we're also moving away from the 100-hour moving average. We bottomed, we moved that down here to test the low price from a few days prior to that, and also these high prices through here, sort of that swing level near the 1.1445. It happens to be the 50% retracement now, but it wasn't at the time. Nevertheless, the ability to bottom against that, move back above the 100-200 really kick-started the move. As you can see, we rotated above this swing area right here. This is the 116.63 to 91 level, and the key of this is how we based against that once again. So the buyers are just showing their hand and finding the technical levels to lean against. If I were to put a area right now as close support, maybe it's this area right here ahead of that 63 to 91 level. This level was a high through here and a low when trading here today, and also a high right here, which matches this low right here. So this area between 117.52 to 69 is a really close level that traders, if they're looking for a top in the euro versus US dollar, I think it's gone too far. A break back below that level would signal a potential for more downside momentum, but we ultimately have to get below the 100-hour moving average and below this level right through here, not to mention the 200-hour moving average to show that the sellers mean business. Let's take a look at the dollar versus yen and this currency pair. While we're seeing the euro and the pound sterling kind of move to new session highs, but to move to new session highs for 2025, the dollar versus yen has been on a delayed. We're not near the lows for the year, but we did make a big move to the downside, as you can see in this daily chart here. Taking a look at the hourly chart, what was key off of this in my mind is that the price is holding below the 100-hour moving average on these corrective moves, and today we're seeing the big move to the downside. That move to the downside is now taking the price below this low right here in most recent trading, and that's below the 142.78. And as long as the price can remain below, that would be the best case scenario for the sellers, of course. Now we could trade above and below that level as the market decides maybe takes a pause at these lows right through here, but even though the prices are broken. But right now, the sellers are really more in control and taking another leg to the downside. They could see the price move down toward these lows are the lowest prices from 2025. So if the price so the bias is more to the downside here and accelerating away from our moving averages through here that we just saw. It kind of got within sniffing distance over the last few trading days. So sellers are taking more control in the dollar versus yen. It would take probably a move above this level right through here to get the buyers a little bit more excited about the move. It was a low right here, and we kind of broke below that level, and then use that level as resistance, probably around the 143, 30 or so level for the dollar versus yen. Finally, let's take a look at the sterling versus US dollar. I mentioned this currency pair made a new high in trading here today, extending above the previous high from last week. Not as strong as the euro to the upside, but as you can see, we've rotated back down below that old high from last week. Nevertheless, make a new high. Taking a look at the weekly chart of this pair, the move to the upside did extend past the 137.68 level, the high price. It's easier to go here. Went up to 87. That 68 to 70 level, going back to the weekly chart, was again the 50% retracement of the range since the 2014 high to the 2022 low. The level comes in at 137.68, and getting above that level and moving back below that level could give the sellers something to write home about, to kind of put a stake in the ground and say the high has been reached. We'll know if we start to move, or traders could take that chance, use maybe the 68 to 78 as a 70 level as a stop, or maybe even the 87 level up here as a stop. But what you're going to ultimately need to see is a move down toward the 200 or 100 hour moving average, just blue line on the chart. Admittedly, we did move below it in trading yesterday, but that was quickly reversed. But we need to get and stay below the 100 hour moving average to increase the bearish bias in the pound versus US dollar. So that's my look at the three major currency pairs that kickstart your day. My name is Greg Michalowski. Good fortune with your trading. Bye bye now.